relative strength line at new high. Zip also reporting after the close today. So we'll throw it back over to you, Ed.
Great, thank you so much. And I'm going to bring over Thinkorswim. And here we have, the NASDAQ today. Harold, what do you think of the market action lately?
Well, I'm getting mixed signals from the market. I mean, we are going up, and all you have to do is just look at the chart. We are in an uptrend. But I think some of the breadth, when I say breadth, I'm talking about like the advanced decline line. It has improved recently, but I'm looking at other areas of the market, like your consumer staples. That is, those consumer staples in ETF has improved over the last month or so. So it's somewhat of a mixed signal that I'm getting from the market. So I am cautiously bullish.
Gotcha. Justin, how about you? Are there any sectors that you're really focusing on or avoiding now?
It's one of those, again, where the rotation is just kind of hitting things. And so industrials certainly seemed like it was a winner yesterday, with United Rentals doing very well, Caterpillar that was mentioned, and Deere. So there's, we put an industrial ETF on Swing Trader. We actually went with a triple leveraged one, DUSL, but XLI was looking like a good setup as well. And of course, as you mentioned, the materials, we're all turning into material girls here, as Nucor, Steel Dynamics, those have been doing very well. So yesterday growth was taking a break, and there's nothing wrong with that per se. The indexes still look fine. The NASDAQ is holding above its 21-day moving average line. Touched it a little bit yesterday, but what we've seen so far, except for that day in at the end of July, where it broke below the 21-day and came right back, it has held that 21-day line really since May, for the most part. And of course that 21-day line is your green line on your Thinkorswim there. So with that, there's nothing alarming, I don't think, about this. It can be tough when you're looking at the indexes and you see this uptrend, and it just makes you sometimes wonder what you're doing wrong. If you're in the wrong stuff, you can very quickly be finding yourself not making progress. The indexes are making progress and your portfolio isn't, and that can be frustrating. Again, this just reminds me a little bit of 2017, where the indexes were going up very steadily. The S&P 500 didn't correct more than 3.4% or something like that, but there was this rotation underneath sometimes where it was difficult to match the indexes sometimes, unless you were in the right stuff, or you held through these little pullbacks, because growth would come right back. A lot of the names that would pull back, they would come right back. And so if you ditched them too early, there was just no way you could keep up with the indexes. You either had to be very fast, buying on pullbacks, selling into strength, or you had to just kind of hold through. And but that could have been tough, not as easy as the indexes looked at the time. And I feel just kind of like we're in a similar environment. A lot of movement around.
Well, Ken, what are you? I'm bringing over the S&P, which is down a little bit, but not as much as the NASDAQ, and it hit a new high yesterday. What kind of stocks are you looking at right now?
Well, just to echo Harold and Justin, certainly have been paring down exposure to some, aggressive growth stocks, top-rated growth stocks. I've been out of in mode for a little while now. Still holding on to DocuSign, DOCU. I've got a nice enough cushion there where I'm going to wait and see what a test of the 50-day moving average looks like if it comes down that far. DocuSign, I believe, closed just below its 21-day line yesterday. So, this is a market I got all the way down to maybe 60%, 60% invested, and I have increased exposure a little bit, not aggressively. New positions are, maybe 2% to 3%. But looking at what I have now, I have, modest gains with some new purchases. I've got others that are up nicely where I've got enough cushion to see what a test of the 21-day line looks like or a test of the 50-day. So market kind of forced me to slowly increase exposure up to maybe 80% or so, maybe 85%. And I've got, stocks in the portfolio that are technically looking strong, that aren't flashing sell signals, but I've got a game plan with every single one of them. So just letting what's working work. And new buys over the past few weeks haven't made huge headway. The one exception would be Pentair, PNR, good industrial name that picked up a couple weeks ago. That's been a nice winner. So yeah, it's PNR. So pick that one up on that. Where was it? Yeah, right in that area. So the industrial stocks are working. So just kind of shaving a little bit of aggressive growth and moving into names like this has been a pretty good strategy so far.
All right. Well, I'm going to get through some things that moving right now. Harold, this is Sono, SONO. Strong results. Is this like an early action, early buy point, or was this something that you would be interested in?
I mean, you got that gap up. I do like playing gap ups. So this is where you'd have to look at the intraday chart on a 5-minute chart and see what's happening with the price. Just looking at what's happened daily so far, you can just looking at where the let's look at right now. It's closed at towards the bottom of the range, and now we've got a new bar for the next 5 minutes. So it's pulled back a little bit on your intraday. When you have gap ups like this, I like to wait maybe the first 20-30 minutes of the market just to see what the stock is going to do. If we hold the lows of today, that's a good sign. If we could break out above the first 5-minute high, 5-minute bar high, that would be a sign that, okay, this stock has got some momentum to the upside.
Gotcha. Justin, Palantir, is this, what do you think of this, and where would you be thinking of a place to buy if you?
Yeah, one of the things that's been a little bit difficult, I've been running some scans. There's a few indicators that we look at for swing trader, and a lot of stocks have been coming up that are below their 50 and 200-day moving average lines, and that's not our normal thing. We really are usually waiting for enough strength in a stock for it to be above both of those moving average lines. And but there are, I feel like, a lot more setups here. I guess one of the things that does make me a little nervous is again, Computer Software Enterprise, which has been a great group for a while here. Seems like it's getting a little out of favor right now. And Palantir really didn't participate too much as that group was moving a lot. It was still struggling below its line. So this is not something that I'm really looking at very closely in terms of purchasing myself. It just doesn't seem like that's where the group action is right now. And right now, I want to have the wind at my back on the group, on the stocks that I'm choosing, having that group behind me as well.
Gotcha. Oh, well, what about DDS? I think you were bringing this up before the show.
Yeah,
Dillard's.
and of course, Allie's our resident expert because I have never actually seen a Dillard's.
Yes.
So this is one of those things where it's hard to kind of come up with a feeling on something. She's also the one that tells us about Academy Sports because I've never seen one of those either. But this was another one that did come up on some of my screens yesterday. Nothing you could do about it because earnings were coming up. And now that those earnings are out, it did get support at the 50-day moving average line. This is something that you look at the retail department stores. The group is number 2. There has been strength here. It's hard to get too excited about it because you think brick and